This is the Telemetry Transportation Daily for June 25th, 2026, and I'm Sam Abdul-Samad, Vice President of Market Research for Telemetry. The Polestar brand has announced it will be withdrawing from the U.S. market following the decision by the U.S. Commerce Department not to grant it a waiver from the connected car rule. That regulation was imposed under the Biden administration and prohibits the import and sale of vehicles that have hardware or software related to vehicle connectivity or assisted driving systems that originated in China or Russia. The ban on software takes effect from 2027, while hardware is banned from 2030. The rule was premised on national security risks. Since the regulation was announced, automakers have been scrambling to trace the source of all software and hardware components in vehicles, regardless of where they are produced. Polestar is the first company to withdraw from the U.S. market, citing this rule. The announcement comes just a month after Volvo was granted a waiver. Both Polestar and Volvo are majority owned by China's Geely Group, and Volvo actually produces the Polestar 3 at its factory near Charleston, South Carolina. The rejection of a waiver likely relates to the Polestar 4, which was initially produced in China and shares more with Geely models, although units for the U.S. market were in fact built in South Korea. The decision to withdraw from the U.S. market entirely is probably due as much to poor sales as it was to the waiver rejection. Polestar could have resourced the necessary components. However, the brand is losing money and sales have failed to meet expectations. Polestar peaked at 12,240 sales in the U.S. in 2023, but only sold 7,209 in 2025, despite having two new models in the lineup. 94% of Polestar sales were outside the U.S. in the first quarter of 2026, and the company will increase its focus on Europe, where it makes 80% of its sales. Polestar will continue to invest in Southeast Asia, Latin America, and even Canada, where it sold 3,600 units into a much smaller market last year. As an EV-only brand, continuing to operate in the U.S. was likely to be an ongoing struggle for Polestar, and it probably makes the most sense to put its resources where it's more likely to get traction. Thanks for listening.